Welcome to a special edition of Momentum Monday. I called it Market Under Pressure. Howard was supposed to join us today, but he's hiding somewhere in New York, probably having a falafel and a shot of tequila. So let me share my screen and my thoughts about the current market. All right, as you can see, we're using MarketSmith today again, which are sponsoring Momentum Monday. This is a chart of a Nasdaq 100. It went down more than 4% today. That's a really rare day. The main indices have not been that oversold for the past 2 years, including that quick flush in February when the XAV index went bust. So 4% is a significant move lower. The good news is that today we finally saw that flush in the indices that scared many people out of their stocks. The bad news is that the main indices closed near their lows of the day, which typically means that there's more flushing left to go. I mean, look at what happened earlier in the year in February when we had those big down days in the main indices. Anytime we had that big 2 or 3% down day and they closed near the lows, the next day we had further downside action. So I expect something similar today, despite the fact that the Nasdaq 100 is back to its rising 200-day moving average, where it's supposed to have at least a small bounce. It's very likely that we see further flushing in the next couple of days. I mean, at this point, we don't know. The indices could easily gap up or down 2%. And those types of markets are excellent for intraday trading, but they can be very frustrating for swing traders just because of those frequent gaps. So what happens during market correction is that volatility spikes. Let me pull up VXX real quick. And but also correlation spike. And this is why during corrective markets, stock picking doesn't really help much just because of the high correlations. You can just trade any downside move or a potential bounce via any of the indices, because most stocks will go up and down together in the same direction. Momentum stocks have been especially hardly hit lately. You can see many of them already having 20, 25%, 30% drawdowns from their recent 52-week highs. This is something typical for market corrections. And many people ask me where do I see the market 6 months from now, and my answer is that I have no idea. Anything can happen. Corrections, at least 10% pullbacks in the main indices happen at least once a year, sometimes more than once a year, and sometimes they're deeper than 10%. Well, we never know how long they're gonna last, how deep they're going to be. And this is the thing, that when an index like the S&P 500 or the Nasdaq 100 pulls back 10%, high beta momentum stock like Square or like Twilo, they can easily drop 20, 30, 40%. And this is why they're high beta stocks. They outperform on the way up and they significantly underperform on the way down. And this is what makes them such excellent trading vehicles in all kinds of markets. I mean, you can make money in momentum stocks on the way up. You can make a lot of money in them on the way down as well, as long as you're willing to play the short sides. And if you don't feel comfortable selling short, you can always stay on the sidelines and wait for a better market. I mean, there's really no reason to be aggressively long in the market when the Russell 2000 is trading below its 50-day moving average, and right now it's trading even below its 200-day moving average. Like 160 was a really important level to hold, and it couldn't hold. As you can see, today it was down another almost 3%. The markets are oversold enough to see some form of a bounce, but likely we'll see a lot more volatility in the next few days, and I wouldn't be surprised if we see even lower prices before we see a sustainable bounce. It seems like the only stocks that are currently somehow holding relatively well are marijuana stocks, and I don't own any of them. I'm just pointing out to the price action that they're holding a bit in a really weak market, which is impressive. Yesterday we saw an attempt for a bounce, which in some stocks, some retailers, which could not follow through. Here's Walmart, for example. They were upgraded by Deutsche Bank, citing that their online grocery business is growing faster than expected, and Walmart gapped up, went up about 3%. Today, it gave back some of its upside move, but it's still holding. It's still holding relatively much better than the rest, and this is a good current example of relative strength. If the market indices recover, Walmart should be one of the stocks to outperform. What else? Earnings season is coming up. I mean, that's, I guess, the good news. Banks, many of the big banks are scheduled to report in the next few days, starting with JP Morgan on Friday. And hopefully, with earnings season coming up, we will move our attention away from all the macro concerns with the trade wars in China, and then we'll focus on the actual fundamentals. And the good news is when the stock market goes down just in front of earnings reports, this is a good foundations for big earnings surprises to lead to big upside moves. So I guess this is the silver lining of this current market pullbacks, that it's really laying down the foundations for decent earnings surprises. That's all from me. We'll see you again on Monday.